Welcome to yet another exciting episode of The Trading Bell. This week on the program, we speak to the chairman of Kenya Airways, Michael Joseph. And Michael Joseph will be talking to us about how the company has performed and the strategic direction for the organization. But really, who is Michael Joseph? Let's take a look at his profile. Michael Joseph serves as the current chairman of Kenya Airways Board of Directors. Joseph also serves as a non-executive director on the boards of Vodacom Group South Africa, Vodacom Tanzania, Vodacom Mozambique and Safaricom Limited. Michael was one of the first World Bank Fellows appointed in March 2011 to advise governments, regulators and other institutions on mobile money and other ICT initiatives. Michael's most recent appointment in April 2017 is non-executive director of MFS Africa, a leading Pan-African fintech company. Previously, Michael was the founding CEO of Safaricom Limited, steering the company from a subscriber base of less than 18,000 in 2000 to over 17 million mobile subscribers at his retirement in November 2010, making it the most successful company in East Africa. This phenomenal growth, stretching nearly a decade, was notable for the launch of many innovative products and services, and he was behind the launch of the highly successful launch and phenomenal growth of M-Pesa and its related services. He has extensive international experience in company startups, the implementation and operation of large wireless and wireline networks. Thank you, Michael.
Pleasure. Yeah,
some
nice
people call
again.
you MJ.
Yeah, some people do. Yeah.
All right.
Yeah.
And Michael, such a difficult moment really for the airline, releasing results this week with a net loss of 7.5 billion shillings. Is the airline still viable?
Yeah, the airlines, look, you have to look at airlines in general. You can't just look at Kenya Airways and say, okay, Kenya Airways made a net loss. If you look at airlines across the world, and I don't really want to compare us, but if you look at airlines across the world, this is a difficult business. Many airlines are in the same situation that we are in. As you've seen in Europe for this last few months, many airlines have gone under. Too much debt, the same situation that we're in. But I think we're in a stronger position. We have a good market position. We have a good number of passengers. We've done better than we did last year. Unfortunately, we came into this, we've inherited somewhat our situation where we're in. If you look at where we came from last year, now because we're comparing 12 months with 9 months, it looks like our loss has increased. But in fact, our loss has decreased from last year, from 2017. So I think we're doing better. We're not there yet. We have some way to go. But to some extent, we're inheriting a situation that developed 5 years ago, and we're still trying to dig our way out of that. Are we in a viable position? I think we are in a strong position still. Okay? We're not in the best position. I would like to have more cash, for sure. For me, coming from Safaricom, where I was in a strong cash position, you can do anything with money.
So much liquidity.
Here you struggle a little bit more. I think with the right strategy and with the right support, we are definitely viable.
I like your optimism, Michael. Of course, looking at the bigger picture, we are seeing Kenya Airways did quite some milestones in the year that just ended, that of 2018. Of course, opening new routes. One of the flagship routes right now is the New York route. And looking at the performance so far, how would you gauge this particular route? Are the prospects looking up, or was it a miscalculated move?
No, definitely not. But if you look at the net loss, if you say for 2008, just if you look at the P&L, the net loss was caused by probably three separate things. One was the New York route. The New York route we started in October last year. It was a massive investment. Now, when you fly to a country for the first time, we have no sales agency in America. We are flying point to point initially, Nairobi to New York. Our passengers have to buy another ticket if they want to go somewhere else. It's an investment. It's like starting a new business. You don't make money in your first year. So it contributed to the loss that we have. But we're confident that with the continuous support and with the continuous flying that we've continued to fly. When we first started flying, not many people thought we would continue to fly. They thought, oh, this is a one-off. We'll stop flying. So when business people see we are flying 5 days a week or 7 days a week when the season turns, they start to have more confidence in us. And then, as you know, we're starting to have more code shares with Delta, so people can buy a ticket from Nairobi to beyond New York.
Sure.
And I think as the market becomes aware of Kenya Airways, and as Kenya grows in terms of market destination or Africa destination, I think it will improve. So it did contribute to the loss. Fuel price in 2018 hit us really hard in the beginning. Remember, prices went nearly to $100 a barrel.
Correct.
Now, when fuel is 40% of your cost, this makes a huge impact on your bottom line, and that added as well to the loss that we had. And then,
sorry to jump in, Joseph. So does this mean you'll have to review your hedging policy?
No. In 2018, this happened before we introduced hedging. So we just had to buy fuel. We have introduced a hedging policy now, but definitely it's now much better. We are hedging, and so we're hedging up to 65% of our demand, and we're hedging now at a price which is below the current market price for fuel. So it is working.
Okay.
So we've learned some lessons. We are getting better, but a lot of the investments we made in 2018 now have to start paying off in 2019. I've discovered one thing about the airline business. You don't turn this airline around just like that. It takes months, if not years, to turn an airline around. I've learned this lesson. I'm extremely impatient. I'm not comfortable where we are, because where you are now, where you're making losses, everybody looks at you as a loss-making enterprise, and it doesn't allow you to grow the airline in terms of financing new aircraft and things like that, which is what we need to do. So I'm pretty confident that we are improving every year, and we will get better.
Of course, Joseph, I do bear with you in the situation you are in, especially when it comes to turning around the airline. But the impatience among Kenyans, among shareholders, is rising by the day. And of course, as you clearly put it, it's a question of time. We need to. It's more of a marathon. It's not a one-off race.
It's actually not a marathon. It's more than it's an ultra marathon, actually.
So, Michael, some of the key initiatives that you will be taking moving forward, as much as you've already done a lot of issues when it comes to cost management. At the same time, I heard you talking about issues to do with expanding your fleet. At the same time, you are having a challenging situation from a cash position.
Now, look, we cannot, don't get me wrong, we are not going to expand our fleet unless we are in a position to afford to expand our fleet. As we are now, we have no aircraft orders at all.
Okay.
We're not buying any new aircraft. We're not in a position to do that until we change our financial position. We are not prepared to go back to the government to ask for another injection of funds. We have what we have, and we have to live within our means. If we can find a way to generate more cash through leveraging our current assets, then we will do that, and we'll try to expand our fleet. But that's why we came up with this proposition of the PPP, and you may ask me about that later on.
Sure.
It was not the intention just to improve Kenya Airways by taking the money from JKA and putting it into Kenya Airways and growing Kenya Airways. That was not what we wanted to do. Our ultimate objective of the PPP proposal was to improve the Nairobi as an aviation hub for Kenya. And I've said this many times, and it was my main selling point to the government and to the president when I sold it to him, was, look, many African headquarters are headquartered in Dubai and other places in Middle East. Why? Because they have great connectivity, because of Emirates, ET. I mean, you've seen some headquarters going to Ethiopia now. Why do they go there? We have a better climate. We have better conditions for bringing up children. We have better schools. Why do they go there? They go because of the connectivity. If we can bring some of that connectivity to Nairobi and improving both the airport and the airline, we can bring those headquarters and those jobs here. That was the goal of this PPP proposal. Yes, it would benefit KQ, because we could put together the assets of JKA and KQ, and we could leverage those assets not only to buy more aircraft, but also to improve the airport. And that was our intention, simple. It was a 30-year partnership. And we still believe that was a viable idea. Okay, maybe we have to rethink and maybe come up with a variation of that idea.
Sure.
But we still think that was the right way to go. Because as we are today, as you rightly say, as we are today, if we just stay as we are with the current